Hello and welcome to Business Live, the first business bulletin for the year 2025. Coming up in this package, banks in the country optimistic about sustainability of Cedis stability in the coming weeks. How feasible is that? We shall be finding out soon. Also in this bulletin, some traders at the Malata Market express mixed reactions towards sales during these Christmas festivities.
The market conditions haven't changed much from last year to this year.
This Christmas, we've never seen such Christmas before because they bought things.
And later on the Joy Business Van, we will tell you how Icon Auto Tech is transforming auto repairs in Ghana. We have details of this and more for you. Please stay. Pleasure you could stay on. I am Pius Kujobaka, and look now at our stories. Some commercial banks are projecting that they expect Cedis stability to be sustained in the coming weeks. There is more in the following Business Desk report. The commercial banks are basing their projection on the current reserve position of the Bank of Ghana, as well as its strong gold purchase program. This has seen the central bank build up some significant dollar reserve, crossing the 3 months of import cover and being able to balance that with significant purchase of tons of gold. The development some of the commercial banks in their advice to their clients say has improved the market confidence when it comes to the Cedis outlook. It has also shown that the central bank is in strong position to defend the local currency in the coming weeks. On whether the cedi can withstand the perennial first quarter pressure every year, some of the banks argued that will be dependent on the incoming administration sticking to some of the programs that have helped in stabilizing the cedi over the past 2 months. And pretty soon we shall have a conversation on the back of that. But interest rates are expected to remain elevated this year. Well, this is due to increasing demand for liquidity in the short-term market. The yield on the Treasury bills hit 30% mark last Friday. There is more in this report.
Interestingly, the rise in yields and bids for T-bills reflect investors' strong desire to lock in at a higher interest rate, particularly because of declining real returns and liquidity constraints. Last week, the government accepted total bids of 4.65 billion Ghana cedis, exceeding its target, and upcoming maturities of 4.26 billion Ghana cedis and 3.28 billion Ghana cedis respectively. Yields rose, with the 91-day increasing by 18 basis points to 28.04%, while the 182 and 364-day bills rose by 11 basis points, each settling at 28.68% and 30.07% respectively. In November 2024, the government received 21.5 billion Ghana cedis of T-bills auctioned. This fell short of the gross target of 22.8 billion Ghana cedis. Unsurprisingly, yields remained on the uptrend, averaging 90 basis points across T-bills.
All right, so let's now go back to our earlier story where I was telling you about the cedi stability and, of course, the reactions gotten from banks. Joining us via Zoom for a conversation on the back of this is the manager of macroeconomic research at Ghana Commercial Bank, GCB PLC, Courage Buti. Thanks so much, sir, for joining us here on Business Live, and a happy new year to you. Now, before we get into the cedi analysis, how will you describe 2024, you would say?
Happy New Year to you, Pius, and your listeners. 2024 has been, an interesting year, and I received, I believe, what I consider the best New Year message so far, that, yes, 2024 has been difficult. You cannot recover or, in fact, restore everything that probably you've lost. But the lessons drawn, the experiences drawn, we can build on that into the new year and then make sure we use that to advantage. And I think that is what it's been, a year of challenges, a year of learning, and a year where if we pick the lessons and pick them right, we could become better for it as more resilient people going forward. So yeah, nothing to complain about, everything to be thankful for a new year.
Nothing to complain about. But let's now talk about the cedi. Do you also share the optimism expressed by these commercial banks that the stability we are witnessing now should continue at least for the month of January? Do you believe so?
Well, yes. I mean, so now in hindsight, you may interpret the Bank of Ghana's actions around November, December as a timely intervention to ease liquidity conditions in the market, and knowing that November typically tends to be the seasonality period where you tend to see a lot of pressure from the importers and traders trying to bring enough goods for Christmas. And if you wanted to have maximum impact, the $200+ million they were injecting on a weekly basis around those periods were meant to more or less improve liquidity conditions in the market and then help avert further slide, given we had slated from about 11 cedi 90 per start of the year to all the way to about 17 cedi just before we enter into the Yuletide season, really. And we've seen the impact so far that has led to some marginal correction on the market. We're closing sub 15 for some of the markets, and depending on where you're looking at, just around 15.5, 15.7 for whichever market you may be looking at, really. And I think at this moment the pressure is more or less contained. We are not seeing as much intervention in the market, but that's because they have dealt with the hotspot, the pressure, I mean, in November and then into early December. And so you would expect going forward that the usual market dynamics, market forces of demand and supply is what we are play. You would also expect that sentiment are a bit more contained. We are out of if you like, the worst period we've seen in currency management, where now reserves has been built up and we have now reserve level that is quite robust, even if we are not still where we want to be. And you do not see immediate shocks coming from maybe the external side of things. Yes, there will be coupon payment from January, but those are broadly contained in my view because they've been provisioned for and all that. So on the back of these, I believe that there is ample goodwill support the cedi to some relative stability, at least in the first month and going into the first quarter of the year. The period where we might begin to see the realities begin to re-emerge is when government is fully formed and the business of government is fully in full swing. And then, of course, banks and other multinationals have declared dividends and are at the point of repatriating their dividends and all that. That is the point where we might see whether the resilience is strong enough or otherwise. But in the meantime, I believe the goodwill, the sentiment on the market, and then the liquidity injection around the seasonal period, which help moderated the liquidity tightness on the market, should carry us on between now and through to maybe the coming weeks and months ahead of us.
I guess then the argument that the real test of the cedi will be when we're getting a bit closer to March or February this year, right?
Agree. And that is where probably things begin to normalize and you are beginning to ask the hard questions. That is where we would see whether there is, and it depends on how the new government handles things between now and then. What has helped reserve accumulation has been, in large part, gold for reserve policy. Yes, the current government, then opposition, have had questions about it, albeit about the transparency of the process. I mean, if they want to continue with the program with better transparency, it helps the market. But if they would jettison a gold for reserve program, then the question becomes, how do you accumulate reserves at such a fast pace? I mean, all of those decisions will shape sentiment as to where the market will see things going forward. And so, yes, the quarter one by March is a test case as to whether we may continue on the path of stability. Or and of course, by that period also, you would have seen the budget of the new government, whether we are keeping on track fiscal consolidation or we are just sitting it, whether the renegotiated IMF program, if we would achieve even something by that time, will be something that resonates with the market or not. All of those picture becomes much clearer, and that will inform sentiment around the cedi.
And talking about what the new administration can do, what more can they do to ensure that we improve the fortunes of the cedi?
Well, in my candid view, they don't have to do much now. Um, yes, I know they won an overwhelming mandate, and there is that. And given the nature of the campaigns and how it panned out, there may be that temptation to again to roll out certain policies almost immediately. And you see the 100-day social contract and some of the things in they may be heavy on the budget and all that. There may be the temptation to roll these things out immediately. There may be temptations to roll out the tax cuts and of course all the other social interventions that were promised and all that. But if we go that path, I think it would send wrong signal to the market. If we go that path, it would have dire fiscal consequences. I don't believe that there is any magic one immediately that can improve revenue accumulation or improve compliance to the revenue laws we have. I think it will be a gradual process, and so we do not have to distort the ship so much. If investors sense that a new government is quite eager to jettison what they consider a program to sanitize the system in favor of some political promises and to gain favor with the electorate and all that, then it begins to distort sentiment. So I think the best thing to do between now and end of the year is to keep it minimal, keep the government running, keep the basics going, and then work at restoring or anchoring the confidence of investors in the market. If you do that as a basis, then you can win their trust going forward, and you can actually attract decent flows into some of the critical projects that you want to roll out later in the duration of this current government.
And in a minute, what will be your projection for the city this year?
Oh yeah, it's tricky. Of course, we will experience some depreciation. Like I said, all of the decisions that will be made between now and March would have a telling effect on where the trajectory is going to go. But if we assume normal course of action and we take precaution, given our fiscal situation and all that, and the need to manage expectations, then I see exchange rate around a 17 cedi to $1 by end of year. All things being equal.
Manager Macroeconomic Research, GCB Capital, GCB PLC, Courage Buti, thanks so much, and I truly appreciate your input at this very moment. Away from that, in a bid to foster collaboration and promote the growth of Africa's startup ecosystem, Chanzo Capital is leveraging collective expertise to build viable businesses and ensure scalability. Now, in 2021, African tech startups alone attracted funding support of over $1.6 billion. Managing partner Chanzo Capital, Eric Osiakwa, says he hopes to leverage partnerships through its Angel Fair Africa event to develop the sector.
One thing that we've seen that a lot of these entrepreneurs are doing it for the first time. So it means that there's a lack of experience. 1, 2, most of them also haven't built a business before. 3, some of them have also not had any corporate experience. So they haven't worked in a company before. So all those things can present pretty serious challenges, right? And so what we do is we try to take an ecosystem approach where we say, okay, it's not just enough to give you capital, but you need other resources that come with the capital for you to succeed. And so when we invest in you at an early stage, we want to play some mentoring role. We want to be an advisor because we can help you beyond the capital that we give you, right? Now, you also need other support. You need somebody who knows legal to give you legal advice. If you don't know accounting, you need somebody who has accounting knowledge. And so at Chanzo Capital, we started this event called Angel Fair Africa. And the idea was to bring all these ecosystem players as well as investors and entrepreneurs together, right? And this event is kind of our deal-making event. So every year, we work with incubators, accelerators, innovation hubs, who give us the founders and innovators that are within their ecosystem. And then we bring, experts. So people who are experts in legal, who are, accounting experts, marketing people, branding people, And then we bring also investors, right? And then we fuse them together. And the idea is that by the time that all the players, in the Excel sat together, the entrepreneur begins to see, okay, I get some capital from the investors. okay, I need to do branding, so I can get branding support from this person.
You're still watching Business Live. We have more for you after this break. Finally, before we go, some traders at the Malata Market here in Accra have expressed mixed reactions towards the sales they've made this year during the Christmas festivities. While others say the 2024 elections generally negatively impacted sales, some say sales performed well. My colleague Rosila Kalistego visited the market and reports.
Despite the bustling election and Christmas season in Ghana, some market women have expressed distress over an unexpected slowdown in business. Although some market women interviewed by Joy Business reported that this year's sales have been disappointing compared to last year's, others were content with this year's revenue inflows. Madam Vida, a tomato seller from Malata Market, expressed her frustration, citing low patronage. She noted that business was better when the town was lively. This election year has been unusually slow.
Difference last year no, na krom daho.
Last year, business was good because the town was lively. But this year, being an election year, things have been very difficult. The market has been quiet and people aren't buying much. Tomatoes have become very expensive and most customers only ask for prices without making a purchase. The new year has been even tough. As traders, we know sales are typically poor during this time. So, we avoid stocking too many items to minimize losses. This is because many people attend church on December 31st and are too tired to visit the market on New Year's Day.
Hajia Sweet said this year has been very slow. She observed that the market has been unusually quiet and noted that Christmas sales are typically poor in election years.
Our customers aren't purchasing like they used to. When called to buy something, all they say is, I am coming, but they never show up. The market is almost empty. There are no buyers, only sellers everywhere. Even the few buyers who come only ask for price and leave. The market has been unusually quiet, and sales during Christmas are always poor in the election years.
Christmas, ya what is but I feel too much.
Madam Eva Egba, a fishmonger, expressed her frustration over the slow business period.
The market conditions haven't changed much from last year to this year. We are struggling. The tilapia has become very expensive. This amount of tilapia used to be less than 10 cedis, but now it's 100 cedis, making it difficult for customers to buy. After selling, we often end up losing more money instead of making profits.
Rosila Kalistego filed that report. That's it for the bulletin. I am Pius Kojo Baka, grateful serving you.